Alright guys, welcome back. It's your boy BB, and in today's video I'm actually going to show you guys something very interesting. Okay, as you can see, I have my certificate there. I'm funded. Okay, so this is my certificate, and I will take you guys through everything that I did that got me funded. But first of all, I will show you guys the dashboard and everything. Okay, alright, so this is the certificate, as you can see, and this is the email. Okay, I've already signed the contract and everything, so I will take you guys step by step through the account, all of the accounts, how I passed everything. Okay, so as you can see, this is the first account, and you can see passed. It's a 10K account. I started it on the second, on the 19th, MetaTrader 5, and it's a 3-step plan. Okay, and this is phase 1, and yeah, I have it here, 419.75, and boom, I'm done. So these are, I passed the phase 1, then I came to the phase 2. I passed the phase 2 also. The next on 23, yeah, on 23 I passed the phase 2 also, which actually it's with one trade, I guess. I didn't know why it didn't update, but yeah, this is a profit. I smashed it. And phase 3, I received phase 3. And phase 3 too, I've been going backward, drawdown 96, then back to 99, 99, 99, 19, back to break even. Then with one trade, I passed a 2, and yeah, you can see I first hit the drawdown, then boom, I made almost 1K in one trade. So yeah, and boom, I received the live account. And guess what? The live account also, I'm up 300, which is very cool. So if you check, come to the withdraw, you see that I have around 300 as for withdraw, which will be due on 17th. Yeah, on 17th actually. All right, so with that in mind, let's get straight into the video. So as you can see, I have this here. I always tell you guys, this year is the module that you ever need, that you ever want in your life. Okay, if you're into trading, this is the thing that will change your trading forever. I call it EITD, which is every day is what? Every day is a trading day. When I say every day is a trading day, I don't mean that you go every day looking for it. Why I said every day is a trading day is because it is a fractal time-based module, that capitalizes on the range of an a candle. All right, so all I'm trying to do is catch the distribution candle in its earliest form before it expands. And what I mean by this is, you know how swing low and swing high forms. Okay, you have 3 candles, so you wait for the first candle to form, you wait for the second candle, and you go in, you try to catch the top candle. And this is a good example of swing. You have one candle with lower high, with one candle that is lower and the other one that is lower, so you have this swing formation, and this is the swing high. And if you do it like this is the swing low, this candle here, because what, this one is higher than it, this one is higher than it, so you have this as the lowest. So that's swing formation. Okay, so when it comes to the time frame selection, it is very important to understand the time frame selection. Okay, this is the main place that will cancel the whole noise that you ever need, that you will ever come across. If you are one trader that is suffering, like you are struggling on the lower time frame, this is one thing for you, the time frame selection. Okay, so with the time frame selection, it is suitable for every type of trader that you are. If you are a position trader, you will want to look for it on the monthly, and you do a daily execution. If you're a swing trader, you want to see it on the weekly, then you do a H4 execution. If you're a day trader, you want to do it on the daily, then you do a what? Then you do a 1 hour execution. Intraday, you have it here, H4 15-minute execution. If you're a scalper, you have it 15-minute EITD and 1 minute execution. So whichever one that you want to do. But my favorite one here is the monthly EITD and the daily. Okay, I love the daily EITD. It has the highest win rates. I remember if you're aligned with the higher time frame, your trade will always go to your direction. So that's what I'm saying. So before I get to the framework, this is exactly what I'm talking about. Okay, this is exactly what I am talking about. You have the first candle like this. You have the second candle, which was thought to soup the high of the first candle. Then you have this candle that returns to the wick and it dropped. This is just it. This is a swing formation. Okay, so you want to cut it in its earliest form. Which one is the earliest form? You can either anticipate it from the manipulation candle. There are traders that execute it from the manipulation candle, but me, I wait for the distribution candle. So this is the real AMD, the accumulation, manipulation, and distribution. It doesn't matter what color the candle is. Okay, it doesn't matter what color the candle is. All that matters is this second candle. It should sweep the high of the first candle, then closes back. As you can see, what happened? It thought to soup this candle, then closes back inside the range. Then what did the next candle do? It opens up here, then boom, it returns back to the wick, then distributed to the low, targeting low of the accumulation candle. So that's basically what it is. Okay. So with this here, I will take you guys through the type 1. And the type 1 is actually this one right here. I have 3 types. I have the type 1, I have the type 2, and I have the type 2 trend following. Okay, but I'm not going to talk about those ones. I think I use the type 2 trend following to pass my account with all those one trades and even put 3% on the account. You can see it here. This is actually 3%, and I have payout. Okay, which is on the 17th. I can just request the payout and boom. Okay, so yeah, I will, for this you have to we'll focus on the type 1. Okay, in the next video I'll talk about the type 2 and the type 2 TF. All right, so for the type 1 is what is market manipulation candle didn't close above or below 50% of range. When I say manipulation candle, when I say MC, I mean manipulation candle. When I say that the type 1 is that it did not close above or below 50% of the AC range. Okay, it means that this manipulation candle, this here is what the high of this accumulation and the low of this accumulation. If you grade it, you will have the 50%. So this candle did not close with full body below 50% of the accumulation candle. When I see that, then that confirms my type 1. What did that tell me? That tells me that yeah, price will return back to the wick of this manipulation candle. Okay, so that is when I will now anticipate price to return back to the wick. Then I will grade the wick. Okay, if it closes below, that is the type 2, which I anticipate that it will not go back to the wick. Okay, but that will be on another video. But for now, let's focus on this. Okay, so you have the framework here, the type 1. The first step is what? The first step is to identify the current order flow. You want to know what the current order flow is. Without knowing what the current order flow is, you are trading against the trend, or you are trading at risk. We all trade at risk, but you are trading at higher risk. Okay, if you want to have the full packaging of this module, you need to follow the trend. The trend is always your friend. Don't try to counter trend, except if you're experienced like me. Okay, but if you are not an experienced trader like me with this module, don't try to counter trend. If you don't understand the current order flow, just leave it. Okay, so the first step is identify the current order flow. Then you identify the PD array. When I say PD array, I mean order block, fair value gap, breaker block, BPR, whatever PD array that you use. But now I will advise you guys to use only 2 PD arrays. Okay, then you want price to come to that PD array. When price comes to that PD array, you want to identify your accumulation candle. When you identify accumulation candle, which is this first candle, you then want to identify your manipulation candle, which is this candle here. Then what? you identify your what, then you grid, because this is the type 1 and this is true. Then what, you grid the manipulation candle wick, which is this. You grid it, and what, first entry at what, at the 25%, second entry at the 0.5% of the grid level. All right, so let me show you guys what I mean here. This is what I mean. The first step is identify the current order flow, which is this. As you can see, if you look at GBP/JPY on this chart here, you see that, well, we broke structure to the downside. This structure is now bearish. Okay, this current piece of price action, don't look to the left side too much. Okay, I see a lot of traders looking to the left side, trying to predict this and that, having too many lines. No, all you need is this current piece of price action here. Okay, so when I look at this, I say that, okay, we violated this low. That is what we have. How many bearish candles here? 1, 2, 3. We have 3 bearish candles. When I see that, I know that, okay, now we are bearish. This is the daily time frame. I'm doing the example on the daily EiTD because that's my favorite one. Okay, so when you identify the trend, the next one is what, identify your PD array. So you want to identify what PD array is closed. As you can see in this chart, I have what, order block here. I have this order block, the last up close candle before this expansion that shifted structure. I have what, this order block here. Okay, so now this is my valid order block that I want price to come to. So you see that I'm done with the phase 1, I'm done with the first step 2. Then what, you identify your accumulation candle. So now what's happened, we see price trade back to the order block. When price trade back to the order block, what did we see? We see this candle, accumulation low, accumulation high. But keep note, okay, the accumulation candle will not be valid until the manipulation candle closes back inside the range. That is when I mark this as the accumulation candle. So you want to mark the valid accumulation candle, which is this here. So we have this what, next step is what, so accumulation candle, yes, you have it, valid accumulation candle. Then you proceed to the next step, which is what, identify valid manipulation candle, which is it here. Now this manipulation candle is valid. Why did I say the manipulation candle is valid? If you remember the time frame hierarchy, the daily EiTD 1 hour execution, so this means that I want to see a market structure shift happen within the manipulation candle on what, on the hourly time frame. If I don't see a market structure shift on the hourly time frame, then this manipulation candle is not valid. It's not valid. Okay, so now I have my valid manipulation candle low, manipulation candle high. So this is a valid setup for me. Like, this is an A+ setup. Right here, I have trend, downtrend. Okay, valid accumulation identified, valid manipulation identified inside of my PD array. This is the valid daily EiTD. Okay, in that case, we proceed to the next step, which is what, grade the MC wick. Why are we grading the MC wick? Because this is what, a type 1. It failed to close below 50% of this accumulation candle. So it is a type 1. Then we proceed to what, to grade the wick, which is this. You want to grade the wick, you want to pick from this part to this level, grade the wick. So now we have what, we have 50% of the wick, we have the lower quadrant, the 25%, we have the upper quadrant, the 75%. Okay, so that is how you go. Then what's the next step? Next step is what, you see, if you drop down to the hourly, on the hourly we will have something like this. This is that wick, this is that graded wick. And what did you see? We see a PD array that aligns with my 0.5 and my 25%. What did I say here? In this level here, I said what, first entry at 25, second entry at 0.5. So it means that we want to see a PD array that aligns with our grade level. Want to see a PD array that aligns with what, with our grade level. If there is no PD array that aligns with our grade level, then you leave it. And as you can see, this is the distribution here. Okay, this is the distribution. So we have what? That's 0.5 your first entry, 0.25 your first entry, 0.5 your second entry if you want a second entry. But guess what? We have this other block that aligns with my key level. So I'm using this other block. That is the entry. Stop loss goes above the other block because I know it's not going back. Then what? You target the accumulation low and you can see the distribution. Why? Because we are in the right phase. This is it. We are in the right phase. You see the distribution to the downside. All right. So for stop loss placement, stop loss goes below or above one standard deviation. What I mean by this is there is the settings that I use, one standard deviation, which I didn't put it right here, but I think I will add it in the next video. Or stop loss, you see, all the stop loss goes above the swing high, the manipulation candle high, which is a lot of pips. Well, I don't care how many pips it is, I'm ready to risk. Okay, so you can see that the entry types that we use, I'll use order block in this level. I use order block fair value gap, but in this case we use what? In this case we use this order block here. In this case it's this order block that we use. Okay, so you have it right there. Then what? Your risk management. Okay, so for risk management, I generally risk 1% per trade, except if I'm sure of the trade, then I risk maybe 2%. But for you, I advise you to risk 1% per trade. Aim for what? Aim for only 2 or 3 risk to reward. Aim for 2 risk to reward or 3. Okay, I think I go for 2 most of the times. Or if I know that price will target the accumulation low or high, I allow the trade. But what happened? I take out my heaviest position at 2R. Okay, at 2R I take off the heaviest position at 2R. So after a loss, I decrease my risk to 0.5 to mitigate the previous loss. Okay, if my account is in drawdown from the beginning and below starting balance, I keep my risk at 0.5 per trade until all losses are covered and my account is at BE again. All right, so for standard deviation, I think I'll show you guys the standard deviation settings. I hope I don't forget next time. I use standard deviation to manage position after taking 80% at 2R. Okay, and then what? Then you allow 20% to run to 4 standard deviation. That is aligning with a low hanging fruit or PD array. And yeah, this is all I do. This is all I do. And you can see I have my come here. This is the trades that I used to I took on my funded. This is for the funded, and these are all the trades I took on the funded. You can see 2, 1, 20, 21. I'm done. Okay, so yeah, that is it, and we'll see in the next video, which I'll explain to you the type 2. All right.